Okay, guys, so good morning, good afternoon, good evening, wherever you are in the world listening to me from. I welcome you to this webinar. Today, our topic is gonna be very easy but very interesting one, and I hope almost all of you must have some idea about moving averages. So, moving averages, that's our topic today, moving averages. I hope you guys can hear me very well. Can I have some messages in the chat box from you guys to see if everything is working fine? If you guys think everything is working fine, then we will go ahead. If there is any problem, then I will first fix the problem if there is any. So I'm looking at the messages. Muhammad Salim Safi ji is saying, love you sir, thank you so much. That's very sweet of you actually, Muhammad Salim Safi ji. Is everything fine? Okay. Muhammad Akib Khan is saying everything all okay. Okay guys, so thank you very much everybody for coming here. I hope you all are doing great, and we also have our PPT. So let's start with this, and I will also take a look at the messages right from the beginning. So Rafael is saying hello, Akib is saying hi everyone. Rafael, thanks for all the great work. Thank you so much, Rafael ji. We hope we can help you with this. PK Rai is saying hello PK Rai ji. Muhammad Salim Safi, love you sir, thank you so much Salim Safi ji. Akib Khan, all okay. Okay, so Asha Singh, okay. Salim Safi is saying sir, आपकी strategy बहुत अच्छी है. Thank you so much Salim Safi ji. I wish it helps you in the long term as well, not only in the beginning but also in the long term. So I wish I can be of assistance to you guys. So I am also trying to look at the messages now. GL Par is saying sir, I am back. Okay, thank you for coming back, and I hope it will help you, these webinars. Walaikum salam Amar Khan ji, I want to know more about support and resistance. Okay, Amar Khan ji, we will discuss about this. GL Par ji, we will also discuss about the support resistance, but first we also have to finish our topic, which is very easy but very interesting, as well as extremely useful. So guys, I hope all of you have some idea at least about the EMAs or MAs, so called the moving averages. So what are the moving averages? First of all, we will discuss about that, and we will also discuss many more details. Monu Nagar is saying sir, hi, आपकी स्ट्रेटजी से $77 किए, आज पर मेरी स्ट्रेटजी से गोल्ड में ट्रेड फंस गई. Level short, please suggest me right way lot size. Okay, so Monu Nagar ji, first of all, it depends. The lot size actually depends on your account size. So if you have an account size of let's say $100, then I will suggest that you only trade 0.01 lots of gold, not more than that. I just joined trading last month. Okay sir, okay, thank you GL Parji. I hope I can help you understand some concepts about trading, and if you have any questions you can always ask us in the chat. Guys, I will start our lecture now formally. Now first of all, let us start with a very simple idea of an average. So moving average is a little bit advanced. Okay, what's the simple average? What is a simple average? What is a simple average, guys? I hope you guys have a good idea about what an average is, right? So what is an average? What is an average of any numbers? Well, the average of any numbers can be the sum of all the numbers, and then you divide the sum by the number, right? So I hope you all have an idea about how to calculate a simple average. Now we are not even talking about the moving average and all that. I'm not talking about moving average. I'm just talking about the average first. So let's start from the average. So what do you think is the average of these 5 numbers? What's the average of these 5 numbers? Well, it is very easy. All you have to do is just add them all. So 1 plus 2 plus 3 plus 4 plus 5, right? And then the sum, you divide the sum by how many? By 5, because that's the 5. So the average which you get of all these numbers will be 3, right? It's a very easy concept to understand. Then let's try some other numbers. So let's say I want to know the average of these 3 numbers. What do we do? Well, all we have to do is just add these numbers, okay, and then just divide them by how much? By 3, because there are 3 numbers. So the average of these 3 numbers will be 5. Isn't it easy? GL Par is saying 3. Yeah, that's right. Sir YJ is saying today webinar is gonna be awesome. Thank you so much, Sir YJ. I hope it can help everybody, including you. I hope it will help you understand a lot of ideas. Okay, so this is a very simple idea about the averages. Guys, it's easy, isn't it? So you just add up the numbers and then divide them by the number of numbers. Let's do one more. So I want to know the average of these, let's say how many? I want to know the average of these 5 numbers. Okay, so these are 5 numbers, right? So if you want to know the average of these 5 numbers, all you have to do is 7 plus 9 plus 11 plus 13, right? And then divide them by 5. So what will be the average? The average will be 9. Okay, so that's how we find the average of all these numbers, of any numbers for that matter. But what's the idea of a moving average? Why do we use moving averages? Why? Because there is something important about the moving averages. And what's that? So let's say instead of saying that I want to know the average of these static numbers, these fixed numbers, because these are fixed numbers, right? I just have given you these numbers 1 2 3 4 5 3 5 7 5 7 9 11 13. So these are fixed numbers. There is no change in these numbers, right? There is no change in the numbers. Now I want to know the average of numbers which are moving, which keep moving constantly. Okay, so let's say I wanna know the average of these numbers. Okay, so 2 4 6 8 10. Now these are the numbers, these are static numbers just for now. Okay, these are just static numbers. Static means they are fixed, they are not moving, nothing is happening to them. So it is easy to calculate the average of these numbers. So how do? You just add these numbers, 4 plus 6 plus 8 plus 10, right? And then you divide them by 5 numbers, because there are 5 numbers. So you divide them by this and you get the answer, which is 6. Good evening, Sharmaji. Thank you for coming. So this is the average of these numbers, right? But okay, now instead of this, I wanna ask you to give me the average of every 5 numbers. So let's say that the numbers are also moving. So they are moving and they are constantly moving. Okay, so these are the numbers. So the numbers keep moving and on and on and on. The numbers keep moving. Okay, so how do we calculate the average of the numbers then? Well, how do you calculate the average of the first 5 numbers? It's the same way, right? So we will call this moving average. Okay, so the moving averages, so let's call them moving averages. So the moving averages will be like this. So the first moving average of first 5 numbers, remember these first 5 numbers, the moving average of these 5 numbers will be how much? Will be 6. Okay, and then we will calculate the moving average of the next 5 numbers from 4 to 12, and the moving average of these numbers will be how much? Will be 8. And then we have to calculate the moving average of numbers from 6 to 2, 3, 4, 5, 6 to 14. And what will be the moving average of these numbers from 6 to 14? The moving average will be 10. Okay guys, so I hope you get the idea. Let's say I wanna calculate the moving average of the numbers starting from 10. Okay, starting from 8, 1, 2, 3, 4 and 5. So these numbers, I wanna calculate the moving average of these 5 numbers. How do we do? Well, it's very easy. You just add up all these 5 numbers and divide them by 5 and the average will be 12. So in this way, the moving averages will keep moving, keep shifting. Right guys? So this is the idea of moving average. Do you think it's an important idea? Well, yes, an average is a very important idea. Because if I ask you that in a given city, let's say in a city, there are 10 people living and everybody has different income. How will you know what's the income level of the city? You will find the average, right? You will just find the average of the city. That's how you do it. In the same way, if we want to know the average price in the market, how do you know the average price in the market? You can calculate it by a method which is called moving average. So this is the broad idea about moving averages. A broad idea about moving average. All you need to do is just calculate the moving average of all these numbers, the prices. The prices are moving in a perpetual motion, in a constant state of motion, right? So how do we calculate the moving average of these numbers? Well, we don't have to do it manually because the computer is doing us this favor. Monu Nagar is saying, sir, give me 5 minutes and analyze the gold right now, please. Okay, Monu Nagar ji, let's do it for 1 minute and I will tell you where the market is going. Okay, so I think the market is probably overbought right here, over here, and I think I will put this one over here, and I can already see that the market is overbought. So what I will do is I will not trade the gold until it reaches this level, and then I will sell it right over here. Not now. I will not sell it right now, but I will only sell it when the gold is making an upthrust. So if the gold makes an upthrust just like this, then I will sell over here. The voice is interrupting. Really? Okay. So let's see what let's see. Is it okay? Okay now? Is it okay now? I hope it's okay. So what I will do is I will sell gold over here only and only if it takes an upthrust. I will not do it right now. I will only sell it when it makes an upthrust. Okay, I hope it is clear now. So let's go back to our GBP USD and do our analysis of the. So guys, what's going on over here is that we have an average and we also have the moving average of all these numbers. And what I will do right now is I will go to the indicators, and over here I will put moving average. Okay, so first of all I will also get rid of everything over here I will get rid of all these drawings. So I am gonna remove everything, and now you can clearly see that we have indicators right over here, and I will use moving averages. You can write down moving average, or you can just write down MA, or you can write down also EMA, but I will tell you about that a little bit later. Okay, a little bit later. So I will just write down moving average. So this is the moving average. Now you have so many moving averages over here. What do you do? Well, first just start with this. Just start with this. And now you have this moving average. Okay. Okay, so guys, is my voice okay now? Guys, is my voice okay now? I hope my voice is okay now. Okay, so this is how I just added the moving average. I just added the moving average over here in the indicators. Now, of course, we will discuss the details of moving averages a little bit later, but before that, I wanna go for an announcement. So guys, please look at this announcement. It's gonna be interesting for you guys. Thank you, Sharma ji. Okay, Amar Khan, thank you. Carl Emil is saying we will have quiz later, sir. Not today, but on 27th of March, which is gonna be the last Monday of this month. So we will have the quiz, and I will ask you only maybe 1 or 2 questions, not more than that. Okay, I will just ask you 1 or 2 questions, and if you give me a reply which is right one, I mean if you give me the right answer, you will get $100 as a reward in your OctaFX trading account. Okay, as a reward in your OctaFX trading account. That's it, guys. It's gonna be a very short quiz, maybe 1 or 2 questions, not more than that. Okay, so please be available for this quiz because you are gonna enjoy. The questions will be very easy, and the questions will be from our webinars, so it will not be something new. It will not be a new content. It will just be the content which we have been discussing all these webinars, all these weeks. Okay, so Anil Kumar Trading Vlogs is saying okay, thank you for coming, Anil ji. Carl is saying okay sir, noted. Anil is saying love you sir. Thank you so much, Anil ji. It's really kind of you, very sweet of you. All right, guys, so what's happening over here? What's happening over here? Well, now we will discuss the moving averages in far more details. We will review the crude oil on our in our live trading session on Wednesday. Manoj ji, please come to that live trading session. I will give you the review of crude oil. Okay, not now because today we have an important topic to cover. So please give me a little bit of time because we have our live trading session on Wednesday. Saeed Mohammed is saying salam sir. Walaikum salam, Saeed Mohammed ji. Thank you for coming. Okay, so guys, let's start our analysis of the moving averages. So how many moving averages can you use? Well, you can use also multiple moving averages, but I will recommend that you only use one single moving average. Why am I saying that? Well, because you will see that the moving average, when you use it, you get an idea about the support and resistance of the market. That means I'm saying that sometimes you can use the moving average. Moving average becomes support and resistance for you. Okay, so moving average itself becomes a support and resistance for you. So how do we know this? Well, I will show you guys where it is happening. Okay, and actually when you have moving averages as support resistance, that means also you can see overbought and oversold in the moving averages. You can also get an idea about overbought and oversold actually in the moving averages. How do I mean? Well, it's very easy, and I will just discuss it right now. So guys, what's happening over here is that you can see the market is touching this important resistance level, right? Vibhas is saying, sir, profit होता है लेकिन बड़े losses देखना पड़ते हैं. Okay, so yeah, I know it happens. I know it happens. Believe me, it's not a problem. It's not a problem. It's just okay. It is just okay. You have to be okay with the losses, because you know what? Okay, so let me take this question because it also relates to the understanding of the market. You know how professional traders think about the market. You know, guys, how professional traders think about the market. They think about the market in these terms. Let me illustrate this point. So this is green, and this one right here is red. Okay, so guys, please take a look at this. What's the meaning of these red and green bars? What's the meaning of these things? Well, all I wanna say about the losses and profits is this thing. Good evening, RN Singedoji. Sir, you explain very nice. Thank you so much. I hope it helps. Thank you so much. So guys, what's the meaning of these green bars and what are these red bars? What's happening over here? What's happening here? Please try to understand. Okay, so Shirak, in Islam, we will discuss why we use moving average. Okay, we will discuss about that. Please try to understand this one simple idea. This is especially for Bibhas ji. Okay, so guys, what's happening over here is that you have these trades. You have red trades, which are the losing trades. Okay, so these are the losing trades. Okay, so the black trade is the one in which you did not make any money and you did not lose any money. Okay, so these are the trades which you have taken. Now say, for instance, just for the sake of an example, these are the red trades, which means they are losers, so you lost these trades. And the black ones are no profit no loss trades. Okay, so you are not earning anything on black trades and you are also not losing anything on these black trades. But the red trades, you are losing, and you are losing this much. And look at the green trades. When you are making money, you are making a lot. So the bigger trades, they give you a lot of profit. And the red trades, small trades, they take away some part of your account from you. That's how the professional traders think. They don't worry about the losses because the losses are small and the profits are huge. That's how the professional traders think about trading. So don't worry about the losses. What is the period of the moving average? Okay, we will discuss that. Please, can you see a spring on Asia low? Is it a spring or not? Can we trade this also on GBP USD? Okay, yes. Keep your profit running and cut your losses. Exactly, Aqib Khan ji. Thank you so much. Yeah, that's right. And guys, about the spring on Asian low, yes, actually there was a spring on Asian low. So this is the Asian low, right? This is the Asian low, isn't it? And we saw a spring on Asian low. So this is a very clear spring. If you could have bought over here, you know how much money you could have made. Now I'll be honest with you, I did not buy today on this spring, but I bought later, a little bit later. Okay, not now, not at this point, but I made some money from the market today. Okay, so this is how much you could have made. 12, roughly 12%, roughly 11.5%. And also there are so many more trades in the market, so many more trades. One more trade over here. It is the test of spring, isn't it? The test of spring. You buy over here and your TP should be over here. Actually, one more trade over here. So there are so many good trades today in the market. So you should keep your profits running, but you should also take some portion of your profits out of the markets, okay? Now let's discuss about the period of MA. So what you will do, guys, please take a look at this, because this is important. So you click on the moving average line, okay, and go to this bar, this icon over here. It is about settings, isn't it? So you just click this one, and you can see that the length of the moving average is 9. Said Mohammed, test of spring is must in market every time. No, it's not necessary, but it is most of the time it happens. Most of the time it happens. And since this is also a test, I would say that this is also a springboard. This is an amazing setup, guys. If you can trade this springboard, you can earn a lot of money. Really, you can earn a lot of money from the markets if you can trade a springboard just like this. Okay, so what's happening over here is that I am going back to the moving average, and my period, the length is only 9. And now I can also do something more. I can go to the style and I can change the color, let's say of red, and then I will go to the indicators one more time, and here I will write down EMA. EMA is exponential moving average. Guys, there is a difference between moving average and exponential moving average, and we will discuss that. And now you can see I have two moving averages. I will go to the EMA one. You see, we have two moving averages over here. Just on the top left of your screen, you have two types of moving averages because you have inserted two averages, right? So you go to the first one, which is the red one, and this is simple average, simple moving average. Simple moving average. So it's not exponential moving average. It's called just MA, or you can also say it is SMA. SMA means simple moving average. Okay, so Neelam is saying, can you little bit explain about spring? Okay, Neelam ji, I think you should go to our webinars. I have given some webinars on the OctaFX YouTube channel. You can go back and watch my videos about the springs. I have discussed them in details, okay? But for now, I will just give you a simple idea about a spring. Guys, I hope all of you know, but this is just for those who don't know, okay? So let's say this is a support level, okay? The market comes down and it goes below the support level and then reverses to close firm over here. This is the point which we will call a spring. I will call this spring. We call it spring, okay? And then you buy over here, the market shoots up. So this is what a simple spring looks like, okay? Very simple idea, but very important. Sharma ji saying, sir, why should we use MA as you had suggested not to use any indicators? Sharma ji, I am discussing this MA. I don't use it. To be honest, I don't use moving average or exponential moving average myself. I don't use it for myself. But why am I discussing this with you guys? Because some of the traders, I know some of you are using already moving averages. Now I'm worried that you might be making some mistakes in your moving averages. So that's why I just want to discuss. This is how you will use the moving averages. Very simple, nothing more than that, okay? I just want to tell you this is the right way to use moving averages. If you want to use moving averages, I have no problem with that. I am just against the idea of using too many indicators on your chart. Kemiji, good evening. Okuna is saying profit and losses. Okay, so let's go ahead, guys. So this is how we are using two moving averages, okay? And you can also always change the period of these two moving averages. So earlier the period was how much? 9. For this one, I want to keep it, let's say 26, because these are the important periods which are normally used by most of the traders, most of the day traders. Okay, so now you can see that this red line has some distance from the blue line. The blue line is simple moving average of 9 periods. The red line is exponential moving average of 26 periods, as you guys remember. Now I will give you simple rules for EMAs, okay? Two simple rules, okay? Two simple rules. Guys, please pay attention to this one. Very simple idea. How to use the moving averages for entry. Very simple idea. But first, let's start discussing about the red and blue. So let's see, guys, what's happening over here? What's happening over here? I am asking about this area. What's happening over here? You can see that the red line is below the blue line, right? Manoj is saying MA is 26 and EMA is 9 in your chart. Please correct. MA is 26. Yes, MA is 26 and EMA is 9. Manoj, it doesn't matter. You have to put one 9 and the other one 26. That's it. Guys, please try to understand this. There is no magic behind the indicators. There is no magic behind the indicators. You can use any indicators, but the idea, the concept is important. It's not important how much you give. For example, you can also do the opposite way. Now for me, the MA is 26 and EMA is 9, right? Well, you can use the opposite of that. No problem at all. You can just use the opposite of that. That will be also fine. That will actually give you the exactly same results. So don't be confused about the numbers. First of all, please don't worry about the numbers, because the numbers keep repeating themselves again and again. And if you are concerned about which numbers should I pick, should I always pick 9 and 26? Well, no. You can also pick the other numbers. For example, you can pick 10 and 30. 10 and 30. You can pick these numbers. You can actually pick 12 and 28. That's it. No problem. But there should be some distance between the two numbers, okay? And you can see that the distance between my two numbers is roughly 20. Isn't it? Or sometimes maybe 15. So what's the difference between 26 and 9? What's the difference between 26 and 9? It's 15, right? So there should be at least a distance of 15 or 20, but it doesn't matter how much distance you have. It should be around that. I mean, it cannot be that you for example start using the EMA of 1 and so let's say EMA of 1 and you start using the MA of 100. There will be too much difference. This difference will become hilarious. It will become funny. So don't do it like this. But other than that, you can use any numbers. That's fine. That's completely fine. So I will go back to 9 for the MA, and for the EMA I will go back to 26, or let's say 25. No problem at all. That's okay. That's also fine. Okay guys, so the number should be any two numbers with the distance of 15 or 20 between them. Okay, so what I am doing right now over here is I'm analyzing that the blue line is above. So look at this. Okay, so not here, let's start from this point onwards. Okay, what's happening over here is that blue line over here, look at this, look at the arrow, look at this point. The blue line is cutting the red line. The blue line is surpassing the red line to the upside. And over here, the blue line is crossing the red line to the downside. Guys, just please keep these two things in mind, okay? The blue line is crossing the red line for going up. When this happens, you have an uptrend. Simple. And when you have a red line being crossed by the blue line to the downside, there is downtrend. Simple. Rajiv Sharma is saying, sir, I have coded in Pine script using MA, ribbon, MACD, RSI and works in 5 minutes very well, but not using as learning price action. Okay. I think price action is more sensible than the indicators. Okay guys, so here, what do you see over here? So over here, what's happening over here? You again see the same thing. The blue line is crossing the red line, going up. Okay, so what are the rules then? What are the rules? Two simple rules. Try to learn two simple rules. One, when blue line crosses the red buying going up, it's an uptrend. Okay, in the same way, when blue line crosses the red line going down, it's a downtrend. Simple, isn't it? Very simple rules, very simple to understand and apply. So guys, remember earlier I said this is an important trade over here. Well, you could also say that this one, or maybe this one, is also a good trade. Why? Because this is where the blue line is crossing the red line to the upside. Blue line is crossing the red line to the upside. So this is the beginning of an uptrend. In the same way, over here, you can see that blue line is crossing the red line to the upside. So this is a fantastic trade. Another trade over here. Where is the other trade? Well, I don't see any trade over here. And over here, what do you see here? There is nothing. So you shouldn't do anything over here, because no any line is crossing the other line, right? No two lines are crossing. So just forget it. Don't do anything. Because you need crossing. You need one line to cross the other line. When this happens, you take the trade. Very simple. Okay, so Sonkwala ji is saying how to distinguish between a spring and a candle breakout. Actually, it's not a candle breakout, it will be a bear trap. A bear trap is when the market goes down and then reverses to close firm. and then the market is preparing to go further up, that's when we call it a bear trap. So there is no difference between a spring and a bear trap. It is the same. Because what's happening over here, let me illustrate one more time. So guys, what's happening over here is that this is the market coming down and then going up one more time. So this is where the market is right now, right? Is it a spring or not? Well, we don't know. We don't know that it will be a spring or not. What do? We will just stay over here. Should we sell? No, because what will happen that people will start selling over here. So these are the bears. The bears are the people who want to sell, okay? So they are aggressively selling over here, and what the market will do, the market will go up and come down to test this level and go up again. So we will buy over here. We will not sell because the market wants you to sell so that you make a mistake. And when you make a mistake, when you start selling quickly, the market will take out your stop loss and go up. That's why we call this a bear trap. A bear trap or a spring, same thing. Bear trap or spring, okay? So I got some questions from you guys. How to distinguish? Okay, so Said Mohammed, you mean sir, if we got spring on 26 SMA, it will be a good trade, right? Yes. Said Mohammed, that's what I'm saying. Yes. Or can we call spring a swing failure pattern? No, we don't call it failure pattern. We just call it a spring. Or we can also call it a bull trap. Or we can also call it a double bottom. Or you can also call it a reverse head and shoulders, okay? Double bottom, reverse head and shoulders, all these things are okay. So guys, what's happening over here? There was a spring over here. Now, I will always say that this is the best trade. This is the best one. But if you only want to rely on the moving averages, then of course this is not a good trade because the market has not turned yet. It has not given you the crossing of moving averages yet. But I will say that this is the best trade. So you can take this trade before the crossing happens. But for those of you who want to only rely on the crossing between the moving averages, the two moving averages, if you want to rely on the crossing between the two moving averages, then okay, that's fine also. You should wait for the market because this is where the crossing is happening. So I will encourage you to take a trade over here. If you take a trade over here, I think it's okay if you put the stop loss right over here. And where do you put your TP? Of course, at this point, which is a huge trade, isn't it? So guys, are you ready to do it practically in the market? So let's do it practically. Let's discover where are the practical spots where we could have taken a good trade. Now guys, you will always see that I advocate testing. I'm a big advocate of testing. What's happening over here is if you take a look at the volume of this bar, it is a no supply test bar. No supply test bar right on the Asian low. I think it is an excellent trade. So this is how I will trade myself. But if you want to start using the moving averages, that's also fine. So what I will do is I will put a support level over here, and this is where the crossing is happening, right? So this is where the market is crossing. The blue line is crossing the red line, right? So this is where the crossing is happening. So what I will do if you wanna trade like me, then I will jump into the market before the crossing, because if you jump into the market before the crossing, you gain a lot more momentum to your side. You get a lot more TP, you get a lot more profit in the market, because I personally don't wait for the market to give me the crossing. Well, that's because I am already an experienced trader, so I don't need to wait for the crossing to happen. But if you want to wait for the crossing, that's also fine, no problem. I have no problem with that. So what if you are waiting for the crossing to happen? Then where do you buy? Well, I think you should buy over here. Just buy on this bar, put your stop loss over here, and put your TP maybe somewhere around here. You can see the key levels. This is how you put your trade. Manojji, we will do the live trades on Wednesday, okay? Bibasji, we will do the live analysis of the trades in the market on Wednesday, not today. Okay, so what's the best time for buy or sell? The best time for buy or sell is when the market is turning. And if you use my strategy, and if you remember, guys, if you remember my strategy, I think you have an idea that the most important thing is background, okay? Background. And number 2 is support or resistance. Number 3 is reference line. Number 4 is overbought or oversold. And number 5, when you have an entry bar. And what are the types of entry bars? Guys, what are the types of entry bars which we have discussed? So you can buy on spring or sell on UT upthrust. You can buy on no supply or sell on no demand. You can buy on bag holding or sell on end of rising market. Hina Khalil is saying remember 100%. That's great, Hina Khalil ji, thank you. I think it will help you a lot. Yeah. So guys, if you follow this strategy, I think it's very easy. And you can do it very, very easily. I mean, you can also combine this strategy with the support resistance based on not the horizontal support resistance, but on the support resistance of moving averages. Bhavik, NS, ND, ERM, BH. Yes, that's right. That's right. Manoj is saying what is the time frame? Okay, so time frame, you can use any time frame which suits you. If you are a day trader like me, then I will encourage you to use 5-minute or 15-minute time frame. I think 5 minutes is better, not 15 minutes. Okay guys, so now one more idea, how to use the support and resistance for upthrust and springs. Is there any way we can use support and resistance for upthrust and spring? Yes, you can. So here, what do you see over here? It is a spring of, it is not a right spring of the support and resistance, but it is the spring of moving average. Kemi is asking what indicator can I use to get the spring? Kemi ji, you should use support and resistance. There is no indicator for spring. Just use the simple support and resistance, or you can also use the moving averages to get the spring, because the spring also happens on moving averages. Okay. Sir, when will you make webinar on news trading? Okay, so Sambhav Jain ji, we will do the webinar on news trading a little bit later, okay? A few weeks later. Please explain upthrust. Okay, Manoj ji, a simple idea about an upthrust is that it is the opposite of a spring, okay? It is the opposite of spring. So what's happening over here in the spring, that the market is taking this bear trap, but in the upthrust it is the opposite story. The market goes up, many people buy over here, and then it comes down and it falls like this. So this is the upthrust. This is the upthrust. Okay, it is actually the opposite of the spring. It is the opposite of spring. Okay guys, so what's happening over here, sometimes I said sometimes we can also use the support and resistance of moving averages. Okay, so I will now get rid of the blue line. Okay, now I will show you only the red line, because we have already explained the two rules, simple two rules for MA. So I will remove these two rules, and now we will discuss how support and resistance can be drawn only from the moving averages. So guys, if you look at the moving average, I'm saying that it is also acting as a resistance. Right over here, what do you see? The market is going up and touching this moving average and then falling. So over here, the moving average is being used as a resistance because it is the downtrend. Again, one more time, this is an upthrust in the, not on the, I mean, it is also an upthrust, okay, like this, but it is also an upthrust of this line, this red line, which is the moving average line. So the market is making an upthrust of this moving average line and then coming back again and making another upthrust, going up again and then making an upthrust, going up again and making an upthrust. So now we don't have this moving average as a support or resistance. But look over here, what's happening over here? What do you call this point? It is overbought, right? It is overbought over here. It is overbought and then falling. And what do you do over here? You will see that here the trend is changing. Why? Because the moving average is becoming slow and slow. It is becoming flat and flat. Over here it is continuously downtrending, but over here it is becoming slower and slower, and then it goes up. For the first time it goes up, it starts going up. And you also see in the price action, what's happening over here in the price action, the market is jumping to the upside for the first time. Why? Because there was a spring at the back and then coming down to the same level of moving average, and the moving average is becoming like a support, and this is becoming oversold. Okay, oversold, just like this, oversold. So it is becoming, the market is becoming oversold over here, and you have another trade right over here. Why? Because look at this, it is this bar right here is a no supply bar, isn't it guys? It is a no supply bar and it is on the support. Which support? It is the support of moving average. It is not the horizontal support, it is the support of the moving average. Christ TV is saying I'm late. Okay, Christ TV, no problem. You can watch the webinar one more time again. What if it cross and reverse immediately? Kemi ji, it doesn't happen very often. Yes, it happens sometimes only. The market crosses and then reverses, but that's okay. That's why we have stop loss. Okay, that's why we have stop loss. It will save us from big losses. Very good evening, sir. I'm late. Okay, Patriot, Indian Patriot, Vinod Kumar ji. Yes, you are late, but no problem. You can watch the video one more time again. And guys, please, can you please like the video? Because if you like the content of the video, give me a thumbs up, please. Will you? Thank you very much. Kumar Saurabh is saying pranam. Thank you so much for coming, Saurabh ji. Thank you for coming over here. Guys, what's happening over here? You have an other support level right around this corner. The moving average is acting as a support, and when it comes down to support level, you one more time buy and it goes up. Arif Abbas ji, I'm great. Thank you for coming. What is the difference between overbought and upthrust? Well, overbought is the overbought in trend channel or in the support and resistance line. Let me show you how. Okay, so if I draw a trend line over here, trend channel, then I will put it probably over here, and you can see that this point is overbought, right? So this is an overbought node. Praveen ji, namaskar. Namaskar. Thank you for coming. So this is the overbought, but it's not necessarily always an upthrust. Sometimes it is an upthrust, sometimes it's not. So what's happening over here? Is it an upthrust? Yes, this is an upthrust. This is an upthrust. Yes, Praveen ji, you are late, but no problem at all. You can watch the video one more time. Guys, please like the video. Please give it a thumbs up. Thank you very much. Okay, so what's happening over here? The market is coming down, trending down, and then you see, boom, this bar is overbought. And it also doesn't have much volume. So if you look at the volume of this bar, it is a no demand bar, isn't it? No demand bar. We just sell over here. Just sell. Bhavik is saying, I think besides using too much indicators, it will be fine to use a simple support resistance strategy as you taught, because it complicates the whole setup. Yes, Bhavik ji, that's what I have been saying all this long. You don't need to use too many indicators. Just use simple rules, simple ideas. Now in this very webinar, I gave you two simple rules. If you want to use moving averages, just follow these two simple rules. Moving average always works better in trending, yes, trend trading, but not working in sideways condition. Yes, that's right. You're right, Arif Abbas ji, you're right. It only works mostly in the trending markets, not in the markets which are in trading range. Bollinger Band works better in consolidation. Yeah, that's right. Bollinger Bands give you the overbought and oversold in the consolidation. Okay guys, I think I have given you enough number of ideas. Just let's go to the slides. If there is anything remaining, the 9 MA, 26 MA, 31 MA, we already discussed. Let's make an MA and the difference between the EMAs. Okay, so we can also make a VWAP. Just a simple idea, VWAP strategy. VWAP, that's another moving average. Sometimes we use it instead of the moving average. So this is like Bollinger Bands. It's like Bollinger Bands, but it is a little bit different. What's the best time session to trade in India? Okay, Raghuji, the best time to trade, if you wanna trade GBP USD, then the best time to trade is 12:30 p.m. in the afternoon. 12:30 or 1 p.m. in the afternoon, according to Indian time. Okay guys, I hope you got some good ideas from us today, but you can already see that this is not working well. Why? Because it is VWAP, and VWAP is only good if you are using in the consolidation markets, not in the trending markets. So I will remove this. I hope you enjoyed our today's webinar. Please give us a like and thumbs up of this on this video. Thank you so much for coming. If you have any questions, you can always ask us after the webinar in the comment box. So two simple rules tell us of moving average. Arif Abbas ji, I have already discussed those two rules. Please go back and watch the webinar one more time. You will get the idea. Okay. Mohammad Salim Safi is saying thank you so much, sir. Okay, thank you so much everybody for coming over here. Now I will take a leave and I will share the promo code with you. So that's the end of our today's webinar. I hope it helped. Thank you so much for coming. Take care. And sir, ND bar is below resistance. Last bar you identify is above line MA. Yes, this is above the EMA line. So that's why I'm saying it is overbought. Okay, because it is above the EMA line, that's why I'm saying it is overbought, and then it falls down. Ravinder Singh is saying the lovely session. Thank you so much, Ravinder Singh ji. Thank you everybody for coming, sir. I want to see. Okay. Thank you so much for coming, everybody. I will now leave you with these ideas. Thank you and take care. Goodbye. Stay blessed.